Everyone, welcome again. This is your very own Mr. Cloud Oleka, and I'm here for y'all. I've been away, I've been busy. I'm sorry, I've not been posting videos, but now I'm back. Okay, I want you all to take this very seriously, very seriously. This video is going to open your minds because I know you're definitely making these mistakes. The mistakes I'm going to outline in this video, I know you've definitely made them and you need a way out. So I just want you all to understand what I'm trying to teach. As usual, just follow me bit by bit. But what can you do for me? Subscribe, share, like, and tell people about this channel. Trade with Cloud. I'm giving out crazy informations that I use, that I earn with, that I make profit with for free. So all you have to do for me is keep sharing, so it keeps going viral. People keep coming, people keep learning, and everything. So today, topic for today is gonna be the perfect stop loss strategies. What did I say? The perfect stop loss strategies. So you just have to write it down. Whenever I'm teaching, I like doing everything live. I use live chat, not cherry pick chat, not chat that I just had to go back in time, screenshot, and start teaching. I like going in live, showing you so you see. Why do I do this? Is so you don't get scared of the market. You don't feel like ah. So now I said the topic for today is gonna be what the perfect stop loss strategy. Oh, strategies. Yeah, it's gonna be strategies. The perfect stop loss strategy, because I'm going to teach you more than one. So I don't know how many I'm going to be able to cover up on this topic, like on this channel, but I'm just going to show you one that I use always, that it's like, oh, the best. I use this always. There's an ATR own, but that one is going to confuse you. Start doing calculation, start doing subtraction, start subtracting and everything. But I'm just going to show you how to do it manually. Why? It's because I show you how to do this yourself. So now it's very important you understand this. So if you look at this, you will see this is BTC USDT pair. So let's say you want to search for any coin and you were using the Binance app. It's very important you make sure you use what we call add this pep at the end of any coin you want to trade. Why? Is because so the price you will be seeing on trading view will be the same price in your Binance app, so your analysis don't go crazy. So you you don't calculate your stop loss and you, oh, I'm supposed to lose $10, but how come I'm losing $20? How come I'm losing $15? You understand? Different exchanges has different prices of cryptocurrencies and whatever. So to use the Binance or to distinguish which is the Binance one, you need to add the pep. So let's say, what does this pep mean? It means perpetual. You're trading perpetual contracts, you're trading futures. So now I want to search a pair, my favorite pair, which you all know. It's Algorand. But now I will not type Algorand because in the Binance futures, uh, you won't see Algorand. What you see is Algo USDT. So when you search for Algo USDT, that's what you're gonna see. But now you need to know exactly how to make sure the price there corresponds with the price in your trading view. You understand? This is very important, because when you don't know this, you will just be doing things and you'll be like, huh, what's this man saying? Mr. Cloud is just talking bullshit. Mr. Cloud is just saying trash. Mr. Cloud don't know what it's. No, I know what I'm teaching you. I'm teaching you so you can make money. You can make money. You understand? So when you see it, what you just see is Algo USDT, big USDT, whatever ZT, USDT, whatever coin. So now, if you're using TradingView to analyze, do not use Binance to analyze so you don't confuse yourself. And me, I trade mainly with phone. I use my computer strictly for analysis. I trade mainly with my mobile device. So wherever I am, I can go out. There's flexibility. There is. Uh, freedom, not sitting down stuck in one position. What I do, I analyze my entries, know my stop loss, my take profit, go into trade, and I'm off for the day. Come back later, check my phone, close either in profit or in loss. I'm okay, go in again. That is how I trade. So now you need to know that you must add the pep at the end of any coin you want to trade on the Binance using the trading view for your analysis. So now this is the pep. So you have to add it Algo USDT PEP. But in the Binance app, you will see Algo USDT. But here you have to type Algo USDT PEP. So the trading view will give you the same price that's going to correspond with the price on the Binance platform. So the Algo, we type USDT. You see, if you don't type the USDT PEP, you will see Algo rant, Algo USDT. You see, this is still Binance, but now this is spot trade. I know maybe you've not checked this, you've not noticed. The price in the Binance spot is different from the price in the Binance futures, even if they are the same pairs. Check it yourself. Just go and check yourself and say, oh, Mr. Cloud, you lied. No problem. So sorry, this is it. This is the Algo USDT. But now you're not trading spot, you're trading futures. Like I tell you all, I am more of a futures trader. Even when I'm trading stocks, when I'm trading forex and everything, I'm more of a futures trader than just trading spot trading or normal trading like that. So you have to add the PEP. So when you add the PEP, you see what happened. Now this is the PEP. Algo USDT PEP crypto Binance. So when you click on this now, it's going to give you the same price with the price that you were seeing on the Binance futures platform. So now we are not trading Algorand, so we are trading the BTC USDT PEP. So you have to do the BTC USDT PEP. So you see this is the Binance. The Binance, click on this, bam, it's still where we are in. This is where we are. So I say always add PEP at the end of any pair you're trading. PEP at the end of any pair you are trading. I said what? Always add PEP at the end of any pair you are trading. So this is gonna be down here because this is not really what I want to show you all for the day. So this is just something that anytime I go into it, and well, just write this somewhere. This is important too. So write it. So now I said the perfect stop loss strategy. Why do you see me teaching this topic? This is one thing I do. Before you make an entry, plan your exit in profit or loss. But most importantly, plan your exit in loss. I've got to explain. So now, this is it. Write it down. Before you make an entry, sorry, I'm typing fast. Always plan your exit in profit or loss. Before you make an entry, always plan your exit in profit or loss. Planning in profit is more important. So I'm going to show you all this because this is a bad habit that Mr. Cloud has. A very bad habit I have. I just want you all to not, it's good you follow. If you follow my bad habits, you will make more money. So now this is what it is. I said, before you make an entry, always plan your exit in profit or loss. So now I'm going to make this now. I'm going to make this white so you all can see, just so it's not be black, so it can be very visible. And I don't know if this is better, so because I reduce the size, so I'm gonna make this in red. Red is more visible, right? Or green? No, white. White is better. Okay, I say the perfect stop loss strategy is the topic for today. So now I say before you make an entry, always plan your exit in profit or loss. Planning in profit, oh, is more important. It's a mistake, please. This is planning in loss is more important. Yes, plan in loss. Why is it important? This is what I do. It's a bad habit. When I go into trades, I first thing I do first is I calculate my stop loss first, and I do not set my take profit because I am comfortable with my loss. So I say, oh, I'm gonna lose 1-2% if this goes against me. No problem. Hakuna Matata. No problem. So I take an entry, set my stop loss, and I will leave the trade play out. When I come back, even if I was supposed to make 20% and I didn't, I'll just say, oh, my bad. Oh, am I in profit? Oh, fine. I close. You understand? Do not follow this strategy, please. But I'm just showing you what I do. It's a bad habit. I'm being very sincere. I most of the time set stop loss than trade than take profit. That's why in my signal, those are part of my VIP signals. I hardly give take profit because just allow it play whenever you're confident, you're comfortable with the close, just close and go. The choice is yours, you understand. But most of the times I set take profit 5 to 10%, but I don't like, I miss 50%, oh, I miss 100%. I don't like all those kind of, so I just allow it play. I just check back when the spirit say, oh, Mr. Cloud, check your trade, and I'm in checking it. So before you make an entry, always plan your exit and profit or loss. Planning a loss is more important. So now I'm going to show you all this strategy. What will I teach you this strategy with? How will you understand this? So I'm going to use one of your favorite and lovable indicator. I know I taught this, and it's very powerful. It gives about 58, about 60 to 80% winning rates. This indicator, I'm going to call it now. It gives a very crazy winning rate. So, ladies and gentlemen, I'm going to introduce to you all the powerful relative strength index. It's called the RSI indicator. So let's go. Adding your indicator is very important. So you see, this is already favorited. You see, look at my my favorites indicators. Look at them. I'm giving you, I'll show you all for free. I don't have uh, I don't have too many indicators because I necessarily do not trade using indicators. I don't trade using indicators for real. But I know most of you are not confident in yourself. You don't believe that, oh, you have reached this level of success. So don't go and do like Mr. Cloud. Learn. You need to start from here. As time goes on, you'll be able to trade without even using any indicators. So now the relative strength index is this lovable indicator I'm going to introduce to each and every one of you. Ladies and gentlemen, I'm going to click it. And once I click it, you will see it's going to show below. Yeah. Now click. Bam. This is the relative strength index. So now, if you don't have it favorited as your favorite, you should just go to built-ins. So you can type RSI. So when you type RSI, click on built-ins, type RSI. You would see the built-ins. You will see related strategy. You understand? So I explained this. When you see what is this public library or library, whatever you want to pronounce it. English is not my first language, so do not look at my English. Learn what I'm teaching you. So now you see, when you go down like this, you would see public library. So now you ask me, Mr. Class, I've seen my student do this, like when I was teaching my student how to use a CPR, because I always use the CPR by Gomati Shankar to teach CPR when I'm teaching the CPR indicator. So I see my student when they tell me, I say, oh, Mr. Cloud, the RSI is so many. Which should I use? Oh, someone will say, oh, sir, your RSI is different from mine. It's different from mine. See, one thing you understand is when you click on public on any RSI below this public library, you would see all these indicators were developed by people. This indicator was developed by, for Glaze, for Shizaru, for H Porter, for Lazy Bear, for Miyako Pro, for When to Trade and whatever. You understand? These are the people that customize, because TradingView gives you the ability to have what we call what is it called? You have the scripts you can I can also do my own indicator and everything and have it here. And you see, maybe when you check something, you will see, oh, RSI Cloud, Mr. Cloud, or whatever, whatever. There's downloads and people using and everything. You understand? So now you shouldn't just jump into indicators. You shouldn't, because the person that built this indicator, that customized indicator, this indicator is giving him or her the result that he or she needs. Do you get? They are getting their results. So you have to use what is built in, because you using this, you will be confused. Trust me, you will be confused. I've explained this and I'm just having to explain this again. So when you type the RSI indicator, always look for the built-ins. Use indicators that are in the built-ins. Which is, what does this mean? It means that this built-ins indicator are like what we call, just like you open your Play Store. There are some app in your, not Play Store, there's some app in your Android device that you cannot delete. There's some apps in your Apple Store, Apple phone, that you cannot delete. Just like the Play Store, the Apple Store, you cannot delete them because they are inbuilt. So you understand, these indicators are inbuilt. These indicators were created for the general public. It was not customized for any individual specific needs. So when you use these indicators, you are using indicators that were designed, customized, created, scripted for these individuals. So that is going to put you into what we call confusion. You're going to have crazy confusion. So use built-in indicator. So now back to this. This is the relative strength index. So when you click on this, it appears, and now you see we have it. Stop stressing me. I'm not gonna pay. I'm not going to pay, please. I'm not. So I'm gonna click on X. So now when you have this, now you would see something. What can you see here? I need to make this a little bit lower. You will see that this is by default, it is 14 and close. So you can leave it open. Choice is yours. You can leave it close. Choice is yours. You understand? So my setting is always 10. I use 10. Why do I use 10? Is so I can get, because the more settings you set, the more what is it called, the lines will change. Like the entries confirmation you would have would be many. So I use 10. So when I click on 10, you see I've got an entry confirmation, entry confirmation, entry confirmation. But when it was 11, 14, I could get probably just one or two confirmations. So now I'm teaching you all now the perfect stop loss strategy, and I'm using your lovable, most favorite RSI indicator. So RSI is a relative strength index. So what does the RSI teaches? What does it shows you? What does it tells you? That is why most of you use indicators and you do not understand what it means. RSI say go long when it's below 30. Sell short when it's above 70. Exit your buy long position when it's above 40. Exit your sell short when it's below 50. So this is how you trade the RSI. I know this is how I taught most of you, which is what is 70, what is 50. I also want to, I'm just showing you, I'm not teaching you how to use this. I'm just showing you something, just like refreshing your brains. So now I said go long when it's below 30. Looking at this line, you see that this crossed below 30, so I have to go long. This crossed below 30, I have to go long. This crossed below 70, I have to sell short. This cross below 70, I have to still do it, sell short. You understand? So this is how you use the RSI. The RSI is a very sweet indicator, very very sweet, but people do not know how to use it. So that's why they complain. Because when I see my students say, "Oh, Cloud, Mr. Cloud is like you a magician." No, I'm not a magician. I'm just someone who is patient to learn. I'm just someone who knows exactly what he's doing. So go long when it's below 30. That's what the RSI tell you. Sell short when it's above 70. Exit your buy long position when it's above 40. Exit your sell short when it's below 50. So now the RSI now is telling you this is a good entry. Chase the bag, get the money. But what if you went long when it was below 30 and it went down again to below 50? Do you know how much loss you've incurred? You've incurred like a very crazy loss. So the RSI say, do like this, you make money. But do like this, you won't lose money. The RSI will not teach you this. That is why Mr. Cloud is here. So now, if the RSI don't teach you this, the RSI is only telling you, oh, it is time to go into this trade. It is above 70. Go in and make money. You would say, oh, I'm going in. You jump in and it goes above 80. You say, oh, Mr. Cloud, this is bullshit. I didn't. You didn't learn. You were impatient to learn. So now, I always say this, regardless of who you are, what you do, however you are experienced in this trade, always use your support and resistance. It is a must. I preach this like the sermon of truth. Life is vanity. Trade is vanity. If you do not draw your support and resistance lines, you must draw your support and resistance lines. Please, whenever you're listening to my voice note, make sure you reduce the volume so my screams don't block your ears. That is for those who are using headsets to listen to my teachings. Okay, I said you must draw your support and resistance line regardless of who you are. I don't care to know what you are. I don't care to know how many years you've been in trading. I don't care to know the strategy you're using. If you do not have your support and resistance line drawn, you are joking with yourself. Please. Yeah. Okay, I said what? You must draw your support and resistance line. So now you are using the RSI and you say, Mr. Cloud, why is it important I draw my support and resistance line? It's not important. I don't see it as something I should do. I don't see it as something I should do. I'm just waiting for the RSI to give me an entry. I go in and close. You're crazy. You're very crazy because you're going to lose money. And you end up saying, oh, trading. Trade is scam, Mr. Cloud. Trade, I lost money. It's because you're not obedient. Maybe you've made certain gains and wins without using your support and resistance to know your exit and everything, and you feel like you've arrived. The market is going to take it back from you. The market is all about give and take. One thing about trading is whatever you are doing wrong, someone is doing it right. And mind you, only 5% of people who trade are successful. The rest 95 do not even know what they are doing. They just heard that, oh, Mr. A is making money from trading and they want to jump in. Please be very careful. Whenever you're watching my videos, make sure you write things down and make sure you watch it again and again, because that is the way you understand exactly everything I'm saying. In my jokes and laughters, I drop important hints that are only taught to my paid student. I drop it, so watch it. I can assure you that following my channel, you're definitely going to be a better trader. You're definitely going to have a better understanding of what you are actually doing. A better understanding. So now you want to use the RSI and you say, Mr. Cloud, the RSI tells me go long when it's below 30, sell short when it's above 70, exit your buy long position when it's above 40, exit your sell short when it's below 50. You say, oh, Mr. Cloud, it's okay. I don't need to learn about resist stop loss, support and resistance. I don't need that. RSI have showed me everything. But now look at this. When you read this, calm down and read this again. Read this again. Read this. Let's give it a minute. Silence. Read this. So now we're back. So now this is why I wanted to know is that this is not telling you what if it goes below 30. I went on a buy long and it's crashed down lower. What will I do? You understand? It doesn't show you that. What if I sold short at 70 and it went higher? What do I do? It doesn't show you that. That is why you must draw your support and resistance line, regardless of whatever indicator you're using. The only time you cannot draw it is only when you're using the CPR. I could say, okay, don't draw it, but it's still very crazy. Me, I will draw it. That is one thing with me. I'm a very defensive trader. You understand? There are two types of trader, the offensive ones and the defensive ones. I will teach that in a different topic. So now, this is it now to draw your support line, because before you trade anything, you must draw your support and resistance line. So we have to find our point. So yes, sorry, please. Before we draw this, because I want to use this instance here to teach you what I want to teach you. This going above 70 and selling short. I want to use here. So we are going to assume something now that from here now hasn't played out. You understand? From here is yet to play. So we just met the market somewhere here, please, or somewhere here. That's where we met the market. You get the point now. So I'm going to draw my support and resistance from here back to the side. So now you go to this place, you go to your horizontal line. So now we find a point that has too many ups and everything. I can't use this level. Why? Is because this is below, this is higher. So you see here we had too much touches. So this becomes, I need to change this to white and I need to make this bold. Yes. So this now becomes our what? This becomes our resistance line. I'm going to delete this. I've already showed you on what this means. So you all know that from here is not counting. So I'm not drawing with here. You understand? So I'm not drawing with here. So I'm going to delete this now right away. So now I want to draw my resistance, my support, sorry. So I will use this level because I don't want to go too far. So I'm using this level. Let's check. Oh, it was a good support. Mr. Cloud drew a good support. You see, this is just it. You see, this is just it. I drew a fucking, sorry for that word. I drew a perfect support. So this is just, what do I check? I check the levels, the lowest level. This is 1, 2. I checked here and I saw 1, 2. And I said, okay. I checked here and I saw 1, 2, 3. I saw again, I saw 4. I saw 5. I saw 6, 7. I said, okay. Okay, this is it. So now you've met this trade and this is your support and this is your resistance line. Support line is below, resistance is above. The line up is the resistance, below is a support. So when the candle is trying to break support, it's pow, break resistance, it pow. So now you're using the RSI and you want to draw this thing and you don't know what exactly you are doing. You're just following the RSI. See, this is important. I don't care to know what you're doing, or I don't care to know the strategy you're doing, because in strategies and everything, I know that due to my years of trading and losing, lots of you are very fortunate. I've blown so much money that I'm so grateful to God and life that I didn't commit suicide, that I didn't give up. Because giving up is only when you fail. For as long as you are yet to fail, you are still very good to go. So now this is it. So now this is your support and resistance, and the RSI, now you're waiting for it to cross this for you to make an entry, or for it to go below this for you to make an entry. Just see your support and resistance line. You see, even the RSI gave you an entry confirmation here. If you have this line drawn, you see that okay, this was a confirmation entry. You would know what you're doing. You understand? So now you would say, okay, the RSI has given me what I want. I am okay with the RSI, waiting for it to play out. And as we are watching, remember I said we met the market somewhere here. We're just still watching, waiting for it to give us an entry. Because see, do not rush the market. Don't just jump. What has been, see, candlestick has been in existence for more than 200 years. This chart you see like this has been in existence before you were born. There is always an up and down. It's always been in existence. Up and down has always been in existence. So I just want you all to know this. Up and down has always been crazy existence. So the money is not going to finish today. You cannot even finish the money. Even the richest man in the world, if Zuckerberg say he's very strong, he should take a position with his net worth wrongly. You see, he's going to blow up everything. You understand? So do not rush the market. I always teach this: be patient with the market. Be what patient. Give the market a chance to prove itself to you. You understand? Give the market a space. So now you want to draw your support, your resistance. You want to draw your stop loss. So how do you draw your stop loss? This is one of the there are many ways to draw your stop loss, but never you draw your stop loss close to your resistance or support. Just for some people now, we say, oh, I'm going to sell short at this entry. My stop loss is going to be somewhere here. What is the logic behind this? Setting your stop loss here. Oh, you say, okay, it's because I want to lose just 2%. Okay, my stop loss will be here. What is the logic behind this? You just want to lose 2%. What does this mean? It means nothing. It means what? Nothing. This does not mean anything. Oh, I just want to lose 5%. So my stop loss will be here. Fine, I'm going to go on this trade. Oh, I'm not getting 5. Okay, 4.9%. I'm going to lose 0.4.9%. Okay, cool. What is the logic behind this? What is the reason? Oh, you just saw that, okay, this is above, this is this, this is that. Okay, I'm going to show you a secret. This is what I do. And I want you all to backtest whatever I teach you. And mark this video, watch this video. If this candle now breaks above, a little above this line, it's going to go high. Today's date is, I don't know what today's date is because I don't work with time. So, okay, today is 19th October. This is 12:45. So watch this chart. If this goes above this a little, if any candle goes above this, it's going to go higher before it probably dumps or continue the journey. Mark this. Just watch this to know if Mr. Cloud is talking bullshit. This is why I want to teach you stop loss, the perfect stop loss strategies. The ATR, this one, I don't want to teach ATR because that's going to stress you. Most of you are not good with calculation. So this is mainly going to be a common sense stop loss strategy. So most of the times you set your stop loss wrongly and you get stopped out and that trade plays and you are out of the trend. And you're like, oh, if I had given my trade a space to play, I would have gotten money. See, let me tell you something in trading. There are some things that are beyond your control. There are some things that you can control. It's better you analyze properly, make the right decision, go into trade, and it doesn't play in your favor. And you'll be like, oh, the market is crazy today. It's not that, oh, I made a mistake. Oh, I did wrongly. Oh, you understand? So that's why you must have a high level of discipline, a very high level of discipline and tolerance. So now it's important you do this. Don't just say, oh, I don't want to lose 4% and you set your stop loss. Don't follow that stupid, what is it called, strategy, that stupid mindset. Sorry for using that word. Don't set your stop loss based on the amount you're willing to lose. Instead, set your stop loss based on the market. Then if the stop loss is going to cost you large amount of money, then you have to you have to adjust your size. So write it. Adjust your size. I don't know who will say that this video is not profitable. So what can you do to impress me, to make me happy? If you've been learning something all through this, just like, share this video, please. Share share my page and everything. I need it. I need more exposure, because the more exposure I give you all, the more money I make from student, from YouTube. You understand? So please make sure you keep sharing. I'm being very sincere. This is how I will earn money. You helping me, I'm helping you. So I need to put in my Telegram here for important reason before I proceed. So you can always contact me with at on Telegram. Please, nobody should trade with Cloud is my Telegram channel. Then if you want to send me a message, you can send a message to at Mr. Cloud Oleka. So this is it. So this is very important. I write this, so even if you want to sell my video, you'd see that this is already here, because most people sell my videos. I don't know why. You can learn and teach and make money. You can learn and teach and make money yourself. It's not a big deal. It's not a big deal. I'm not against you making your money. I'm not against you learning and enriching yourself. It's your choice. You might have a community of people that want to learn from you. You can charge them and still do what you're doing. So, okay, this is what I want you all to understand, because this is very important. So I said what? I said if your stop loss is going to cost you huge amount of money, so you have to adjust your size. I'm going to come back to this. So now I want to set my stop loss. This is what I do. This is one of the perfect strategy I use. What do? I set my stop loss above the previous highs. Teaching you all a secret, but let's just go. This is 1, the previous high. This is 2, a previous high. This is 3, a previous high. Remember, I said the year has played out, so which means you've missed all these opportunities, because selling short here would have given you this, should have given you, understand, definitely you're going to make money, and you're definitely going to lose money. It's 100, it's a 50-50 thing, you understand. But when you know what you're doing, your chances of losing is more like 80 to 100 or 90 to 100, but definitely you're going to lose, but you're going to make more. So now, why is this important? I set my stop loss from previous highs. What does it mean? Okay, this was the previous highs. You see, this high did not get to this level. That was why. Go to your own chart, please. Go to your chart, BTC USDT PEP. Your chart will be clean, because this one now is kind of I'm drawing things, so you can still go back to this day. This should be 18th of October 21. So use the 15 minutes time frame, so you can also follow what I'm doing, so you can check this yourself. So you see, I went with this. I calculated these highs, and these highs. You see, this at the high point, the high level of this is higher than the high level of this. This tried but did not succeed and was pressed down, market uncertainty and everything, you understand. But this, you understand, one of the rule is, this is one secret that people don't know. Let's say this is a red candle, and another red candle is here, another is here. If another red candle now crosses this line, it's going to crash lower like this. You understand? What does this mean? This is a very simple logic. This is a very simple logic. It means that this was dumped here. This red tried to reach down here but did not succeed. Tried again but did not succeed. When it finally tried, it succeeded and went down low. Now this went high, did not succeed, came down. This now tried, but this did not reach the level that this reached. So this did not succeed at all. This now tried, surpassed this, and went higher before crashing lower. You see, then when this now came, this surpassed this and went higher. You understand what I'm telling you? If another one gets to this level, a little days, it's going to go higher again before it comes down again. You understand? It's God. I wish I can just open my head and say, everything I have, pay me $1,000 and I give you all my knowledge. My videos are very long, but this is going to really help you. Going to really help you. So now you are judging, setting your stop loss from previous highs. Why is it important? Is because when it crosses above the previous highs, it now becomes a 30, sorry for my handwriting, 30 slash 70. And if you know one thing about Mr. Cloud is, I do not like gamble. That's why I do not like people who are using a gambler's mindset to trade crypto. Never trade crypto with a gambler's mindset. So now, when it crosses above this, yes, most of the time it can cross above this and then shoot down continually. Understand? And then proceed with going down. You understand? But one thing, just like here, you see, it tried to break here, did not succeed, went down to this level, tried to break here, did not succeed. When it broke here, instead of going high again, it just went high a little and it's crashed down to even this level. You understand? Most of the times this is definitely going to play out. You're definitely going to see it happen. You're definitely going to see it become a norm. It's going to be a very easy norm. So now this is what I do. I don't like gamble. When you say when now, for example, now you did not set your stop loss and it's go above this previous day high and reach this level, you understand, you can say let you leave it, but it's risky because you're not the one controlling the market. The market is controlled by emotions, people's emotion. People are like, oh, this is going high, I'm going to pump. Oh, this is this. See, all these things you see are people that got scared that it went higher, it did not succeed, and now dumped Bitcoin. That was why Bitcoin reached this level. Even this dumping, people that saw that, oh, this was a false breakout, and you understand. That's what I want you to understand. So your stop loss should always be above your previous day highs. So now let me write something very important. So this is how you set your stop loss: previous highs, which is the PHS, then previous lows, which is the PLX. So what does this mean? It means you calculate your stop loss from the previous, calculate your stop loss from the previous highs, which is the PLs, or the previous lows, which is the PLs. You understand? So I said calculate your stop loss from the previous highs or the previous lows, which is a PL. Previous high is if I want to sell short. Previous lows is if I want to buy long. You understand? So I will also go back to this, adjust your size. Let me just leave this one side. I'm going to explain this, why I mean when your stop loss is too far. So now if you notice at this chart, you would see that now if I want to go into this trade now, forget whatever the RSI is telling me. I have my support and resistance line drawn, and my mind is telling me if I want to sell short, if the RSI gives me a sell short entry confirmation, I must set my stop loss above the previous highs. So I have to check where is the previous highs. So now these are the previous highs, but this is the highest level of the previous highs. So now my stop loss needs to be a little above this level. So let me put in my stop loss. I'm going to make this red, a little above. I'm having heartburn and it's nothing serious though. So sorry for that, please. So I'm going to set my stop loss above this. I just hope you all are seeing this. I hope you all are seeing this very well. So remember, I said my stop loss is going to be above this, the previous day highs. So what am I saying is that if this candle don't successfully crash and break this highs, that means that the market is going to go another way. You understand? So to be at the safer side, you get the point now. So now you say, okay, now I've known the logic behind setting stop loss. The perfect stop loss strategy is setting your stop loss above the previous day highs or below the previous day lows. You understand? Below the previous day lows is when you are going in from the. I need to take a break. I will be back, please. Okay, I'm back. I was having heartburn. I'm back. I'm back. I'm back. So now, this is it. So, I said this always should be above. So whatever the what is it called, the RSI, whatever indicator is telling you, you know exactly what you're doing. You're waiting for it to get okay. You said okay, the RSI has told me that this is above 70, but I have to wait because this is my previous day high. My stop loss need to be here. Then I'll just take an entry in the trade and wait for it. If it breaks above this line, that means it's gonna be something else. You understand? So this is just what you should know. So like I said, write this somewhere. Calculate your stop loss from the previous day highs, which is a PH, or previous lows, which is a PLs. So this is the previous highs, this is the previous lows. So now let's say now the RSI gave me this confirmation entry that this is going to be, because this has crossed my 30, and the 30 said when it crosses your 30 like this, then it's below 30, go long. So I want to go long. So now how do I set my stop loss? I have to check the previous lows, which is the previous lows now is here. You get this should be it, I guess. Yeah, this should be the previous lows. So your stop loss should be somewhere here. So what does this mean? It means that if the market gets to this level, then definitely, let me draw my stop loss. This is a stop loss line a little bit below. Don't go and put it close to this place because it can bounce here and start playing here. So put it a little bit below. Let it be, it cross this mark. So okay, so you get, so this is the previous low. So now when you've done this, now you've known, you're using the RSI now, waiting for it to cross the 70 mark for you to sell short, or cross the 30 mark for you to buy long. So now you've known this, and now you've known how to set your stop loss, which is set your stop loss a little bit above the highest highs of the previous highs, the lowest lows of the previous lows. It's very simple. This is a previous high, previous high, previous high, but this is the highest, so it needs to be above. This is a low, this is a low, this is a low, but it needs to be, you understand, the previous lows. So now what I was saying about this, adjust your size. So adjusting your size comes in, go to your meter rule and click like this. You would see if I took an entry here, let's say, let me go back. Now I want to go, the RSI gave me an entry here, so which means I need to sell short, I need to go long in this entry. Now my stop loss now need to be below the previous lows. This is the previous lows. So now I have to calculate this. My entry now should be somewhere here based on the RSI indicator. Okay, somewhere here. So now you see this is what, this is 2.53. So now what does this mean? This means that if I'm using 100k to go into this trade, it means that if I'm using 100k to go to this trade, and I'm going to lose 2 point what again, sorry, I just have to go back again. I'm going to lose let me calculate again, my brain skipped. I'm going to lose okay, yeah, I'm going to lose 2.53%, 2.57. So what does it mean? It means that I'm going to lose let's say 2.60% of my account size. So now 10% of 100, this is just simple. 100,000, 10% equal to 10,000. So 100,000, 1% equals to 1,000. So what does this mean? It means that in this trade I'm going to lose $2,600 or naira, whatever you're trading with. So which means if this trade goes down to this level, you're going to lose 2.60, which is 2.60%, which is 2,600 or whatever the currency derivatives or whatever you're using. So now this is very important you understand this. That's why I said adjust your size. So now if you are not comfortable losing 100k, thousand 2% of this, if you're not comfortable losing this, all you just have to do is to maybe divide your size by 3, which is, let's just use 35. It's now to now be 35. So now the 10% of 35,000 is 3,500. So now the 1% should be 300. Now we have the 35 00. So if 1% is 3, that means you're gonna lose 700. Okay, you see, now you have what we call, you have adjusted your size because you already know your exit. So this is something you would not learn anywhere. So now this calculation I did was for those who are not using leverage. You understand? Those who are not using leverage. So now you've adjusted your size because you already know your exit. Do you get what I just mean? Because now if you're using 100k to trade at 2.60% loss, that means you are going to lose 2,600 whatever currency you are using. Because the 10% of 100,000 is 10,000. The 10% of the 1% of 100,000 is 1,000. So now if you're not comfortable losing 2,600 of whatever amount you are using to trade, then you have to adjust your size. Adjust your size is to reduce or divide this your initial entry by 3 or 2. So I divided it by 3, or something like that, by 2 point something or so, not close to, let's just say I divided it by 3, but because if you times this by 3, it's going to give you over 100,000. I'm just trying to make you understand something. So you divide it by 2 or by 3. Maybe you could use 50,000. That is if you're comfortable losing 1,300. That means you will use reduce it by 50,000. Then if you're comfortable losing 700, whatever size you're using, then you reduce it by 35. You understand? So why is this important? This is very important. Very, very important. I have a whole lot. You have to do all these calculations because this is a school. You're learning something that's very, very going to help you perfect your trading. So now you see, you already know that, okay, this RSI has given you an entry, but you need to know your stop loss. So if the market is gone against you, okay, because if it breaks here, it's a certainty that is definitely going to go lower and lower. You see, it broke. Whenever it breaks a line, you understand, it's definitely going to go lower and lower and lower. So you don't have to take that gamble. I don't want you to take, I don't like my students taking gamble, making silly mistakes, because I know this so you can learn this. I know this so you cannot make mistakes that would cost you your finance, because I don't know how you made your money. I don't know whatever is motivating you to go into trading. So the choice is yours. So you see, this is very important because now this is the previous low. So now my stop loss is here. If you see, if I had taken this entry now and my stop loss was here, you see my stop loss will not be triggered. Probably I would reap this profit. I would make good profit. You understand? I would make pretty good profit. Let's say from here I would make more. You see, I would make 4.40, which means the ratio loss and win is by 2. That means I was going to lose, for example, if I was going to lose 10,000, I was going to make 20,000 if it went my way. You see, this is what the calculation is. So you need to know where to set your stop loss. This is not even strategies. Let me just leave it at strategy because this is the perfect. This is going to give you a very good peace of mind when you are trading, because this is something I teach my mentorship student, like this particular strategy. I don't teach it to, I just tell you, okay, a little bit above you teach, you understand, but I'm giving it to you all for for free. So what do? Like, share, and subscribe. And it's very important you will watch my videos. Do not just watch my videos once, because you will not understand. You understand? And always have your pen and paper, so whatever I'm saying, you are writing it down. So all these things don't seem like, oh, Mr. Cloud is doing some kind of magic. You understand? I'm not doing any magic. I'm just trying to make you understand these things, and these things is definitely going to put food on your table. If you trade like this, one thing first is you're not going to blow off account. Now, I just taught you this strategy now using the RSI indicator. You understand? So now this gives you a relaxed mind, because the RSI is telling you that, okay, this is a good entry. No problem, you've entered. You're not rushing to come out because it hasn't destroyed your previous low. So you can wait till you are in profit, because definitely since it hasn't gotten to this level, then it shows that you're still safe. It shows that because see, this is why I tell my student, before you trade with 100,000, in a trade, before you make an entry with 100,000 and you have a stop loss of 2% loss, be okay with your loss. Be patient that, okay, if I lose, no problem. You understand? Because when you have this mindset, you give your trade room to play. So why is this strategy important? This is the reason. It's sorry, it gives your trade room to play. You see, understand? This is why this strategy is important. It gives your trade room to play, which is you don't get stopped out early. Do you get what I mean? It means that what I said, it gives your trade a room to play. This is what made this strategy very important. I need to reduce this, so let's view. Okay, I hope you're seeing it. You understand? So it gives your trade room to play, because when your trades don't have room to play, your trade is just going to, you're just going to keep losing money, and the more money you lose, the more you'll be like, oh, this Mr. Cloud is teaching us bullshit. Mr. Cloud don't know what he's teaching us. You understand? So now you need to be confident. You need to be okay with your loss. That is why, sorry. That is why I explained this place. That is why I did this illustration. So about this, adjust your size. So you need to know this. It's very important, so you can adjust your size. So now this is very important. This is very important for you to do. You need to write this somewhere. So now, for those of you that are using leverage, this 2.6% loss, I know most of you don't know how leverage is calculated. Most of you do not know how it's calculated. That's a problem most of you have. You see this 2.60, you do not know. This is how leverage is calculated. Okay, if it is a 10x leverage, and that scale shows you that you're going to lose 2.60, this is what you do. You just say you're using a 10x leverage, which is 10 multiplier. You use the 10 times 2.6, which will be equals to 26%. You understand? So when you're using the 10x leverage and this 2.6% loss, that means it's going to be 26% loss. So which means if you are using 100K, 100,000, 100,000 in a trade that's going to give you 26% loss, in 100,000, let's say minus 26% loss, 26% loss, this is equal to, that means you are going to lose 26,000. Do you understand me now? So that is why I tell you something. It's good you trade with that leverage. Even if you want to use leverage, use at least just 2 leverage. Don't use excessive leverage, because you end up blowing your size. The truth is, let me tell you something. When you're not using leverage, you would not make quick money. But at least if you know what you're doing, even if you're not using leverage, in a month you would be able to at least make 50% to 100% of your size, at least 50% every month. So let's say you're using 100,000 and you're getting an extra 50,000 every month. Let's say you're using $100,000 and you're making an extra $20,000 or $10,000 every month or 30,000. You understand me? Because you're not using leverage. So that way your trade has room to play. Because when a trade do not have room to play, you suffocate the trade. Suffocation, I mean, you're not giving your trade the privilege, you're not giving it the freedom. You're suffocating it, because when you use leverage, you'll be like, oh God, calculate from if I calculate from uh if I calculate from what is it called, from year to year, I'm going to lose 26%. Oh, I have to be very conservative. You now come down and I say, oh, your stop loss is here. You understand? You're going to get stopped out, and this buy long is still going to play out. Do you understand me? So it's very important you know that, oh, I'm gonna lose this percent leverage. Then you adjust. If you're gonna use leverage, remove the leverage, you still use your sides. You understand? Allow your trade play out. You would enjoy. This is the beauty of trade. Allowing your trade play out gives you freedom. You would watch the market play, and you're not scared because you already know what to do. You already know how to go about it. You already know what to do for your trade to play. So you are relaxed. You can even sleep. It's that people who are see, let me tell you something. Big traders that trade with millions of dollars, they do not use leverage. You understand? They're not after 100% gain, 200. They're after 1%, 2% gain. If they can make 2% of their size or 3% in a day, multiply it by a month, you see they are making cool amount of money. They're making at least 50 to 100% of their size. So if they're using 10 million or $1 million, they're making at least $500,000 every month. You understand? So this is what it is, because when you're not using leverage, your loss will not really shake you like that. Like, it will not be like, oh, so imagine now I use a 10x leverage to go into this trade, and I saw my RSI entry confirmation at this level, which means I went long at this level and I'm hoping for it to break down here. Then boom, it broke down, and I'm losing 26%, which is, I use 100k to go into the trade. I'm losing 26,000. And let's say it's in dollars, that means you're losing $26,000. You would just sit down like this one day and just be calculating, if I had this $26,000, I would have buy or bought something like this. I would have used this money to rent a good apartment. I would have, God, trading has killed me. You understand? It's because of this. Because see, for you to lose 50% of your account size in a trade without leverage is rare. Like, it is rare. I'm telling you, you can backtest even when Bitcoin crashed and everything. If you were using this strategy, you're using the previous lows now. So it's from the previous lows, you know your entry, you know your exit, you understand, you know exactly what you're doing. So this is what I do, and this is just a topic I want you all to just calm down and learn. I would have taught the ATR, but I do not want to confuse you. I do not want you to uh, get confused about what you're doing and everything. I want you to know what you're doing. I want you to believe in what you're doing. Like I told you all, if this now, this were the previous lows, one, previous highs, one high, two high, three highs, and this is the third one. If this candle now go a little higher, then this is going to go high again before it comes down or continue the journey. You could check the time and date of this video and confirm this and tell me. You understand? So when you're using the RSI strategy, waiting for the RSI to play, and the RSI has given you a sell short entry, which was, now this was a sell short entry, you use your previous highs calculation. That is, maybe you came into the trade and this has already played out. Judging from this, you see that this is the highest highs of the previous highs, and this is the highest. So you can say, okay, my stop loss is here. You make your entry however you met the market, and probably would have gotten something before maybe there's a bounce back or something, and you can decide to close. You understand? But this now gives your trade freedom of expression. You understand? The market needs to have freedom, because when there is no freedom, you are making mistakes. So now I just have to just do a recap so you all can understand this. I said the perfect stop loss strategy. Before you make an entry, always plan your exit in profit or loss. Planning in loss is more important. Why is this? It's planning when to exit the market. It's more important than when you take profit, because you can be chasing profit and the loss will be grievous. Because if you don't know this now and you set your stop loss somewhere here, and this trade went high like this, and you see you've missed this money, you understand. But if it was above this and it didn't play out as you want, no problems, no problema, problema, no, no problem. You understand? And I say you must know your support and resistance line. Regardless of who you are, what you are, however you've learned, who taught you, who is your mentor, how many years, always have your support and resistance line drawn. Why is this important? It's because when you have your support and resistance line drawn, you know one thing: where to set your stop loss. You know the previous highs, because the support and resistance line helps you calculate the previous highs and the previous lows. This gives you a very good understanding of the market. So now I said again, calculate your stop loss from previous highs and previous lows. Very important. Calculate your stop loss from previous highs and previous lows. This is very, very important. So this is the previous highs and this is the previous lows. If you had saw this entry confirmation, went into this trade and your stop loss was here, you see you give your stop loss enough room to play. Why? It's because you're using my strategy, the previous lows. You understand? So you gave it enough room to play. So what does this mean? It means that, oh, for as long as it doesn't get to this level, you are not panicking. So now again, I talked about adjusting your size. If you calculate the distance from your entry to your stop loss is larger than you can manage, is larger than you can accept. It's not all about you adjusting your stop loss. No, 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 no. Do not adjust your stop loss to fit into your size. I need to write this. This should be the boldest thing I'm going to write. I said what? Do not adjust, capital letters all through. Do not adjust your stop loss to fit into your size. I'm going to make this bold because it's going to be the very thing I want you all to learn, because this is a summary, so I'm just trying to make this. I'm going to make it red. Okay, no, red. Then I'm going to change the background to white. Okay, I'm going to make the border white. So I'm going to make the border white. So I'm going to make the text wrap. Okay, I'm going to remove that. So I said here, I said what? Write this somewhere. Do not adjust your stop loss to fit into your size. So let me change this to white because I'm not even seeing this thing. See it here. I said do not adjust your stop loss to fit into your size. Instead, adjust your size to fit into your stop loss. This is the most important thing. Adjust your size to fit into stop loss. So please, even if you know you're a professional trader, you've learned trading, you've known trading and everything, this is a very important information Mr. Cloud is giving, and I want you all to pay close attention to this. This is to traders, people who are actually trading. I said, what did I say? I said, do not adjust your stop loss to fit into your size. Instead, adjust your size to fit into your stop loss. This is very important, and I'm going to explain. This is a summary. I'm going to make this smaller so I can explain. So now this is my explanation now. If your loss now from year to year now is about 2.6%, now you're going to lose 2.6% of your size, which is, if you're using 100k, you're going to lose 2,650. So you do not have to say, oh, I need to lose 500. Then you now start going like this to where you know you're going to lose 500. Your trade has not, you're trading like, if I'm around you, I'll use something and break your head. I'm joking. You understand? So instead, you reduce your size to a size that you are comfortable with accepting this loss. The benefit of using the previous highs and previous lows is that it gives your trade the perfect room to play. This is a perfect video about stop loss I know you're going to watch on YouTube. So you have to subscribe, you have to share. People need to watch this video. And if you think that Mr. Cloud is talking bullshit, backtest this perfect stop loss strategy. Backtest it. Try it with any indicator you're using, the RSI, the EMA, and everything. I'm sorry, I'm going to cover just the RSI indicator, but maybe I could do a video later to cover another one. But this is just what you need. The understanding of this is what you need. So whatever analysis you're using the reversal, using the breaker, using the pullback, using the whatever, previous days highs and previous days low, or previous highs and previous lows should be your stop loss exits confirmation. Please, I love you all. I want to see you all win. I want to receive Mr. Cloud, since I started watching your videos, I've been seeing lots of changes in my trading. I've been seeing lots of growth. I've been understanding the market. See, I do not trade, I do not teach only crypto. Whatever I teach you, try it on any market. CFD, options, stocks, forex, commodities, whatever, indices, whatever market, whatever field, try my teaching, try it there, and you're definitely going to see great result. The reason why I use BTC is because I love BTC, because the movement in BTC daily crypto is mad. Like, it's faster than other markets. You understand? It's highly volatile. The volatility is mind-blowing. So I was recapping again. So this was it. So now I said again, 100k, this is it. So I said go long when I was explaining the RSI, go long when it's I said go long when it's below 30, sell short when it's above 70. Exit your buy long position when it's above 40. Exit your sell short when it's below 50. Very important. Very, very important. This is how, if you use a clean chart, watch this video, analyze, draw your support, your resistance, use a strategy. Once your strategy gives you an entry, then set your stop loss above the previous day highs and below the previous day lows. So in summary, what should I tell you? This is what you should do. When you use your strategy, after you get a confirmation entry, okay, set your stop loss below the PLs or above the PH, depending on your entry. So I said, when you use your strategy, whatever strategy you are using, I don't care to know. After you get a confirmation entry, very important, set your stop loss below the previous lows. That is if you are in a buy long entry. Then above the PHX, depending on your entry. That is if you are, if you are selling short. You understand? So this is very important. It's very important you know this, because if you do not know this, you would think that Mr. Cloud is just talking bullshit. That is why I love it when people say, oh, Mr. Cloud, we've checked your strategy and it's rubbish, it's this, it's that. Now I'm back. So you have to turn on your notification, turn it on. So whenever I post any video, you get to see it, you get to watch it. Watch it and learn. It's very simple, self-explanatory. Watch it and learn. So now when you use your strategy, I don't know what you're using. I just taught you a strategy, the RSI, now using support and resistance, knowing your stop loss. Because I don't want you telling me, oh, you blew off your account, you lost your money. People are not supposed to blow off account again. People are not supposed to lose money again. You understand? You're not supposed to, watching my channel, you're not supposed to lose money again. You're supposed to instead make more money and say, oh, Mr. Cloud, I'm going to pay for your advanced classes. I'm going to pay. I'm going to, you understand? I'll be happy. I will be happy. You understand? And I hope as you're watching this video, you are enjoying it. You're enjoying it, right? So watch again and again and again. Get this, get the logic behind this. The logic behind this is very simple. When it crosses this, I explain this, bam, 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 boom. If it's green, a green. You see, when this green went above this green line, you see it went higher. When this one went above here, you see it went higher. Went above here, it went higher. You see, when this closed in red, when this reached here, it went lower. When this reached here, it went lower. God, I'm not going to teach you all this. So I remind you very own Mr. Cloud Oleka, and I thank you all for watching my videos. I thank you all for watching my videos. Subscribe, like, and share. Spread the news. Mr. Cloud is back. Back to teach you something you would pay thousands of dollars to learn for free. Get this knowledge, enrich yourself, help your community, and be happy. God bless you all. Thanks.